What's up, guys? Tremaine here. I'm gonna do a quick little case study, I guess, into one of the reasons why I took the trade that I did on Thursday this past week. The retail false flag, or the flag trap. This is something that I know a lot of retail traders fall victim to. So I kind of just want to dive into this and see if I can open some eyes for some people. So let's get it going. Daily chart, we have this sell side here. This was the drawn liquidity on the daily time frame. I was not interested in longs whatsoever. Nothing about this price action here says go long. So I was looking to go short pretty much all last week, and I was targeting this volume imbalance here and the sell side here. So our bias was bearish, and we're looking to target the sell side here. We've gone the 15-minute chart. Okay, this is that daily sell side liquidity level here, and we have relative equal lows here on the 15-minute time frame. This is what I was targeting intraday. Okay, so this is Thursday's price action here. I was looking to go short and target these lows before the market opens. We run out buy side liquidity here. We take out traders who trail their stop loss. The market was pretty much dropping all week. Traders trail their stop losses above this high, come down again, leave relative equal lows. Traders are going to see that as support. We come back up, take out buy side, and we trade it into this liquidity void. So in this section of price action here, there's no wicks and there's no bodies. It's just blank space. That's a liquidity void. Okay, we trade into that by a tick or two, and then you see the immediate reaction there. And then again, we're bearish. Okay, at least I was bearish. I'm looking for sell side here, and our ultimate objective on the daily time frame was the sell side here, so keep that in mind. Okay, on the 1-minute chart, the gray outlines here is the morning session. So where the gray starts, that's the stock exchange open. Okay, and here are those relative equal lows on the 15-minute time frame on the 1-minute chart right here. That's what I'm annotating, and then that's the buy side right here. Okay, so the lows and the buy side right there. Take out buy side, trade into that liquidity void, break lower, and I'm looking for these lows to be engaged right there. Closer look, still on the 1-minute time frame. We trade into that liquidity void by like a tick, break lower, taking out this low. We trade up into the bearish order block, break lower again, and smart money is accumulating shorts inside this mitigation block. So we have a high, a low, a lower high. We break lower, so this is a mitigation block. It would be a breaker if it was a high, low, and a higher high, but since we have a lower high than this one, this is a mitigation block instead of a breaker. So we accumulate shorts in here, break lower. So at this point here, everybody is expecting lower prices. At least I'm expecting lower prices. Okay, we've been dropping all week. We're dropping again, and we have relative equal lows that are obvious, and then not to mention we have that daily sell side level right here on the daily chart. So it's pretty clear to everyone that we want to go lower. Okay, here comes the false flag trap. Okay, for people who are not experienced with price action, or who are unaware of what the markets are doing, I'm pretty sure there were a lot of people who fell victim to this on Thursday last week. So the classic retail false flag pattern is they'll like to see a move lower. So we see here, this is the flagpole, and consolidation, which is the flag, and they'll like to see a continuation to the downside. This is retail logic. This is what they want to see. I don't subscribe to that idea. I want to see us retrace and take out buy stops here, but we'll get into that. Okay, so this is what retail wants to see. Okay, and let's actually see what happens here. So while this consolidation is going on, there's sentiment building all in this consolidation. Traders are in here trying to make money. Okay, it's choppy, it's messy. There's stop losses and entries and exits happening all through here. Okay, so above this high, we have buy side liquidity. Okay, BSL. We have buy side liquidity. People are wanting to go short here. People are wanting to, breakout traders really, okay, are wanting to go long on this breakout. Okay, so people have orders resting above here. They're saying, okay, as soon as this trade breaks out, I'm going long and I'm going to target this high or something like that. Okay, there's also sentiment building below this low. Traders are saying, okay, we're consolidating. This is a flag, right? A bear flag. As soon as price breaks out below this low, I'm going short and I'm going to target this low. Let's actually see what happens. All right, so the traders who are breakout traders going short, all right, they got wrecked right here. They had their entry to go short right below this low. What happens? They get tagged in and the market rips against them. If you watch my execution video on Thursday, I had a sell limit waiting right in this fair value gap. I love to see this because I know traders who are breakout traders going short, they just got sucked in right here and now they're in drawdown and it's ripping against them quickly. So that's one side of the marketplace. That's one side of retail that just got wrecked. Okay, boom, breakout traders who are going long, they get tripped in. Now they're long. What are they reaching for? Well, they say retail, okay, who went long right here on this breakout, they're saying, I want to take out this high, I'm aiming for this high, I'm aiming for this high. They're unaware that we traded into a liquidity void, order block broke lower, mitigation block broke lower. We're not taking out these highs because we're bearish on the 15-minute and daily time frame. Okay, order flow is bearish. This is just manipulation. Okay, taking advantage of retail logic. So traders who are short here are sitting in drawdown or they close their position. They got absolutely destroyed right here on this little move and it ripped against them. Traders who are long, okay, they're now in this long. They're probably excited. They're happy, right? They think they're going to make money. They think this high is going to get taken out. They think this high is going to get taken out. But they don't notice this. Look where this candle stops. The body closes right at the high of this fair value gap, okay? And it doesn't close past mean threshold of this bearish order block. I was short right here. As soon as this candle closed at the high of that fair value gap, I knew we were going lower. Okay, that's the signature that ICT teaches. And that gave me all the confidence to hold this trade. And once that happened, and then we opened lower and left it, didn't even want to trade back up into the high of that fair value gap. We just opened and left. I knew that retail, fell victim to this false flag right here. Instead of dropping, consolidating, dropping again, it dropped, boom, tripped them in by a tick, rallied up, and then we dropped. Okay, so both longs here got destroyed and shorts here got destroyed. And people who are in the know, people who are aware of this false flag trap, like myself, were able to take advantage of that opportunity and go short. Okay, so I was aiming for these relative equal lows here. I didn't get it. Now this is the micro contract. On the actual E-mini S&P 500 contract, this low was taken out. Okay, so you could look at your ES charts, but for micro ES, this low stayed intact, but that's fine. I only trade the E-mini contracts for my Top Step account, but for my live TradeStation account, Real Funds, I trade micros on there. But in my live trade execution, you'll see that once I realized price was unwilling to get below those relative equal lows on the 15-minute time frame, I'll go back one more time. These lows right here, once I realized that price was unwilling to get below those lows, you'll see my trade execution that I was short 3 contracts, I believe. I closed one below this low, I closed another one, and then this up close candle is a bearish order block. As soon as I saw price disrespect that up close candle, I closed my position entirely. We ended up rallying all the way up into this bearish order block here, completely repricing this inefficiency. We break lower, inversion fair value gap. This is starting to turn into a micro review, which is not what I wanted, but it's fine. Inversion fair value gap right here, extend all the way through, hit it, consequent encroachment, break lower, and this is a bearish breaker. So we have a high, low, higher high, which makes it a breaker. These last 3 consecutive down close candles form your breaker. We accumulate shorts in there, and then we break lower and we tag those relative equal lows in the 15-minute time frame. So that's kind of the false flag flag trap that a lot of retail falls victim to, and this is just one way to avoid it. If there's an obvious level of liquidity or obvious target that everybody is seeing on the higher time frame, and we know we're likely to go lower, expect some sort of manipulation. If we're expecting lower prices and it's so obvious on the 15-minute and daily time frame, we're looking for those lows to be tagged. If it's so obvious and we're down here, we're this close to it, and we start forming something like this, I'm expecting manipulation. I'm expecting for breakout traders to get manipulated and get destroyed here, come all the way back up here, and I want to take advantage of these buy stops. I'm going to sell those buy stops up here and take a short, and ideally just come all the way down here and take out those relative equal lows. That's really it. That's the false flag trap. Just thought I'd put this video out there. I know a lot of people trade those retail patterns. Even if you don't trade ICT concepts, this can still save you from a lot of losing trades. So just something to consider, something to back test, a little case study on your free time, and learn from it. So that's all I got for this video. Until next time, peace.